Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, April 29th, 2019, and this is the Daily Report for Gold and Silver. After some pretty respectable gains on Friday, the precious metals complex as a whole is trading lower today with a huge disparity in terms of percentage drawdowns, with the best performance drawing down by just over 0.5% and the biggest percentage drawdown today losing almost 6% in trading. We had strong economic data come out of China, as well as the fact that we have a lot of economic data due out this week, along with an FOMC meeting for May, which will begin on Wednesday. Those will weigh heavily on traders' minds as we go through this trading week. To the board, gold down $7.10, currently trading at $1281.70. That's after reaching a high today of $1289.10 and a low of $79.90. So it's about $3 off the low, and it's also about $6 or so off of the high, or a little bit more. Silver losing a full percentage point in trading today and breaking back below $15 per ounce, $14.85, and that's after factoring in a decline just over a full percent at $14.85. The least decline in terms of percentage drawdown was in the platinum market, but still below 900 again after losing $4.30. Platinum futures are currently fixed at $899.30, but the big downside move occurred in palladium. Palladium currently down $83.80. That's 5.8% in terms of its drawdown. $1,364.40, and that's after exhibiting a $100 spread between the low and the high of the trading day. We'll look at that along with gold as we pull up our technical studies. Traders, no doubt today's declines after witnessing very, very respectable gains on Friday is disenchanting in terms of the ability for gold to move up and break through current resistance this week. When we take a look at our daily chart, we can easily see that it's given up a good percentage of the gains achieved on Friday. Well, that would be these last two candlesticks here, and the red candle opened just above the trading range of Friday and really closed below the midpoint. And that is the perfect definition of a candlestick pattern simply called a dark cloud cover. Of course, for that to actually issue some sort of a sell trigger in the market, we would need to see that the following day was a large red candle with a lower low and a lower high, but it is certainly something that we want to watch. When we consider the highs that were achieved on Friday as well as the intraday highs today, and take a look at this area, this is the 0.38% retracement line, and it is where we're showing some very, very strong resistance. Above that would have to be the 100-day moving average, and that comes in just about $3 above that price point. So in terms of a target area for resistance between 90 and 93, and we can effectively see that on our daily charts. At the same time, we've got this narrowing of range because I do believe that currently we still have support at the current low areas. And when I say low areas, I'm speaking about the bodies of these candlesticks last week and not necessarily the lows. Of course, the bodies are composed of the range between the open and close. And except for Tuesday's candle last week, which closed precisely at that price point, the remainder of that week was above it, and even the candles preceding it were above it. So I believe that that's a pretty effective support level, and that tells us that we have a defined and narrow range, and until we see this market either break above resistance or below support, we could trade kind of sideways as we go into the FOMC meeting and the release of some economic data later this week. It is for that reason that we are standing pat. My recommendation is to hold a neutral stance with no active trades in gold or silver. To take on a trade in gold, we really want to see it break either below current support or above current resistance. And traders, although gold sold off and gave up $7 on the day, you can see palladium by far slid, and very similar to what we saw a couple of weeks ago when over a 2-day period we saw a decline of about $200 in palladium. from these highs here at about 1520 up until it found some support just above 1300 at about 1310 to 1317. Now, the market slowly has been meandering up, and it's been meandering up as it kind of follows this 100-day moving average. And that's what's been so interesting about this market, is that when it did sell off and had subsequent trouble trying to find its footing, so to speak, it really maintained a price point right around the 100-day moving average. And that continues to today. The 100-day moving average is sitting at 1351.50. Market closed at 1363.40. And that's after an almost $84 decline. We had over a $100 trading range in the market. So in that way, it is similar to these candles that we witnessed a few weeks ago, which were some of the most dramatic sell-offs I have seen in the precious metals markets. Now, where could palladium go from here? Well, it certainly could track lower. But if history, recent history, is our guide, I believe that we could see a dip, but not really break below this 100-day moving average. As I said, currently at 1351, a break below there would put our next real support level in palladium at about 1317. And obviously, traders, we have resistance at 1459, call it 1460. And that, of course, is the 0.23% retracement level. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.